for a closer look, we are joined by Vivek Vaidya. He is associate partner at Frost Sullivan. So Vivek, thanks for joining us. Just want to get first of all, your reaction to this 25% tariffs on autos in the US. So is this a negotiating tactic or does it have more legs, you think?
It is a bolt from blue for sure. I'm sure that all the Asian automakers which have so far looked at US as one of their biggest market and profit generator are watching this with a very, very tense mindset. This can well be a negotiating ploy, but I'm not sure whom they are negotiating against because these are individual companies and they have simply no way to cope up with this tariff without causing any disruption. And ultimately, it is also the American consumers who might suffer because of this, because 25% tariff, there is absolutely no margin or no company who can absorb this. So they have to pass it on to the customers. And this is obviously going to result either in supply delays, lack of demand, or increased prices in cars. So it's a bolt from the blue that nobody wants.
Yeah, let's talk about the potential production disruptions to the sector. I mean, coming on top of disruptions from Donald Trump's tariffs on Canada and Mexico, where Asian automakers have also been operating. And talk to us also about the sort of additional costs that we could see for Asian fleets from all the uncertainty surrounding the tariffs.
Yeah, so this is definitely going to see. Automotive production is not something that can shift or migrate from one country to another in a matter of weeks or months. These are supply chains which are laid out over a long period of time, a few years, a few decades. So just saying that we want the production to migrate and putting tariffs on top of it is certainly not the way in which you will get production up and going in few months. It will take a long time. So that is not something that is going to happen immediately. And as a result, you are going to see some kind of production disruptions in both countries.
So I'm assuming that is going to be the shorter term implication. But what are we looking at in the longer term? Will Donald Trump achieve what he wants?
The companies will evaluate this, whether this particular phenomena is going to carry over to the next regime as well. Because, mind you, Donald Trump is in power for next 4 years. It takes a lot longer for the supply chains to move from one country to another than 4 years. So if there are indications that this will continue forever, then the companies might think about it. If they are planning to invest in some other countries, they might come into US and do the investments. But disrupting the existing supply chain and replanting that in US is not something that I think any company would be thinking of. And that is something that I think is very, very difficult to happen.
Could we see some sort of concession? I think in this week alone, we saw reports that Hyundai said it would invest some $21 billion in the US over 4 years to bolster local car production. And so Donald Trump has, of course, claimed credit for this move. Whether we could see automakers kind of do, perhaps enforce such action just to appease him.
Yes, so such kind of announcements can happen, but this investment doesn't happen in next few months. It takes a long time. The plants take a long time to come up. The supply chain, the part companies also need to migrate to this nearby to the plant. So even if the announcement is done now, the actual car will roll out maybe after 3 to 5 years from now. So of course, we can see a flurry of announcements, but whether they'll be backed up by the actual delivery or not is something that I'm not absolutely sure about.
And Vivek, talk to us about the economic ramifications for countries like Japan, South Korea, key in this supply chain. And also whether, these major car manufacturing countries can function without the US as a key customer.
No, they will have to figure out a way of how to work with US with this, unfortunately, because the way they have built their models, their domestic markets are very small, and they have completely focused on US as not just the volume but the profit generator. So let's say you go to China or you go to India, there are huge amount of volumes, but the amount of profit they're able to generate from these geographies is not as high as US, and therefore US is like their lifeline for generating profits. So in some way, they will have to figure out how to do it. Maybe there is a short-term pain as far as each of these companies are concerned, but in long term, they can't really simply ignore US as a market and carry on the business as usual. But this is not a development that they are looking forward to. That I can tell you for sure.
All right, Vivek. And we will be monitoring this story, of course. Vivek Vaidya there. He's associate partner at Frost Sullivan.